Investors and traders, welcome to the channel. Market chart pattern today is 15th of March 2025. Hope everyone is having a great weekend. We will be taking a look at the key US markets. This is going to be the video part number one. We will just take a look at the US dollar, the bond market through the eyes of the bond futures market, and then we'll take a look at the gold market. And that is going to be all, and Bitcoin as well. And then the equity markets, I'll do a separate video tomorrow, and we'll take a deep dive into the equity markets, because last Friday the price action in the equity markets and the equity indices in the United States, it did something really important, so we need to discuss that. As always, the video is for educational purposes only. It is not a financial advice. So let's take a look at what is happening with the US dollar. You can see that this was the region where we had our resistance levels, or it was our target as well. And once we hit that zone, we have seen a sharp decline in the US dollar. Although the previous week the decline was about 0.5%, but the week prior was 3.4% decline, which is really strong. So now the chances are that we are actually in this ABCD leg lower, most likely, but we are not going to get a confirmation till we take the 99 level out. But this has been a pretty strong move to the downside, and if we just try to use the market symmetry concept, this was the largest decline in this move higher, and you can see that we are pretty much right there. And this is where the 61.8% retracement is as well, around 103.50 level. We are a little bit lower than that. So we'll just keep on watching this space. It's got a chance to maybe also go down to about 102, which is going to be 78.6% retracement. We have 200 week moving average there, so that is likely to be a good support region. So we'll have to wait and watch and see what will happen. But the dollar has actually weakened quite a bit. Okay, so now this is the price action on the daily chart. We can see that after it completed our pattern formation right here, this is when the DeepSeek came out, that news over the weekend, and then we can see the market has been just really not just very strong. So last week is just trying to consolidate right here. The chances are we could hit actually 1 or 2 level on the dollar index. It's just below these key levels. If it begins to get above this, then we might be able to get some sort of a relief rally. And if we get a relief rally, this is the previous rally that we have seen. So that would be the kind of the first target, and of course this DeepSeek one is a much bigger one, but this one will be the first one. And then we also have the 200-day moving average right above that, so again a likely resistance zone. So momentum is pretty weak. The price is actually way below the 200-day moving average, and you can see that the 20-day moving average is also catching up. Okay, on the flip side, if we just take a look at the euro, you can see that the euro has been pretty strong. The euro is about 51% of the dollar index, so it's not exactly the mirror image, but there's a lot of similarity to it. And now it's right at the 1.618 expansion, just below the 78.6% retracement. It is consolidating, but the chances are it's also likely to hit the 78.6% retracement a little bit higher. And then if we take a look at the GBP USD, the cable, with the cable we can see it's also a little bit strong. Yeah, it's just consolidating. I think it can also hit the 1.3 level, so really interesting what is happening with these. And this is just want to show you on the longer term. We had a really key level coming in around 122, which was the 38.2% retracement of these lows of September 2022, when we had the mini budget come in with Liz Truss being the prime minister. That's when it hit its lows. Kind of a double bottom formation right here with respect to this 382. So right, it's getting into a region where we could see some resistance come in, but overall it's, you can also view it as a range bound formation, but this one is a little bit different with this one because of the weakness coming into the US dollar. And if we were to just take a look at this on the for the euro, is really interesting. This was the key region we were talking about, where we had really good support coming in, and then the market zigged and zagged, and then it's just gone up right into here. We have moved several moving averages right here. We have got 107 as the potential, a little bit higher actually than this on the daily chart. Let me show you what I mean. The 78.6%, 109, so 110 roughly we can say, that the market could actually aim for, but we could see some consolidation come in as well. Okay, now let's just take a look at the Bitcoin, what is happening with the Bitcoin market. So you can see that in Bitcoin there has been a lot of volatility, and we were talking about on the daily chart. I'll show you that at the break of that level we're talking about the Bitcoin drifting towards the 72,000 to 70,000 level, and it certainly came down as low as 76,600. There is still a possibility that it could head even to 62,000. It's really volatile index. Excuse me, the crypto. But the month of March is a really key month based on our model of a Lucas timing model. So I'll try to show that in a bit. Let me actually try doing it. It is on this one. I think I have it here. It is a slightly different one because it's the all-time. This is the one, and I have to move it to the log index. Here we go. So we have got key timing coming in the month of March. This is really important. In March of 2024 is when we had a peak come in the Bitcoin, and then it just went sideways till September, and in September we had another key timing coming in. And then of course in November we had the elections, we had this breakout, but the market from September actually closed positive. October was positive, November was a big surprise, a move higher. And then if we just add another 7 months, which is Lucas number, we get 2 times 7 equals to 14, which is giving us the March. So we'll just keep on watching the month of March really carefully. I think we have some really key timing coming in this month. Okay, now let's take a look at the USD JPY. So I'm just gonna move down to the weekly chart. Here we go. So this one is kind of just hanging about this 50% level, and if the US dollar begins to strengthen a little bit, I think we can see a move higher. Where we go. So this was the double bottom scenario we were looking at right here. Of course, it did not hold, and it has come back a little bit. So it remains. You can see the trend is towards the downside. The Japanese yen is getting stronger, and of course, the US dollar is getting weaker. But it's changing a little bit, and especially if the equity markets begin to put in a bottom and the rally come in, and I think we'll begin to see the US dollar actually getting stronger one more time, and this would mean that this down move that we have seen, it might be coming to an end, if the equity markets actually begin to rally, which we'll discuss further. And you can see that it's right at the 61.8% retracement from these lows. Here we go. There we go. So we'll have to keep on watching this space quite carefully. And now let's take a look at the short end rates. This is the 2-year treasury note, and here we have seen a potential double bottom right here, and the market actually, the rates had actually come down quite a bit, but on the shorter end of the curve we are seeing some retracement here. I don't think we are likely to go much further. Here we go. And if I just take this is the rally which had been in this leg. The market symmetry concept, I think we can see a movement right into 4.08, 4.10%, a level that is possible. And if we just take a look at the 10-year treasury note, you can see that this one completed ABCD to the downside, which is the CD leg is 1.272 of the AB leg. We are seeing a bounce. The bounce is equal to the symmetric move we had seen before. So it does actually, I do think that here is finding resistance from, also from the 38.2% retracement. It's most likely to actually move lower. So the yields, it does look like want to move lower on the 10-year treasury note, and maybe we can see the yields move to 4.06 to as low as 4% on the 10-year, which is going to be, quite a bit of a relief, because a lot of products such as credit cards, insurance products, or mortgages, etc. They are built on treasury notes and bonds of 10-year or more duration. So of course, it's a really important market. It's really, really big. It's much bigger than the long bond futures market. And if you were to just take a look at this on the futures market, we can see that it's just the inverse of what we see on the TNX, because that is yield based. It also completed this 1.272 times the AB leg, ABCD. I think what it's doing is we're just going into a consolidation, something like that we had done right here. We didn't get right to the exact bottom in terms of symmetric move, but if the market begins to find support from here, I think it could rally again, and then we could see 1.1223, 113 possibly as well. And on the long bond futures, we can see that the market it found its resistance from after completing this ABCD in blue, and I don't think it has completed its ABCD right here. So maybe it's got a chance, but the way this market is, it looks like it's just finding support right from this level. So I think I'm actually thinking of lower rates. The trend line is there. Maybe it completes the ABC. That is also possible. Then we'll also have this symmetric move in the blue line right here. So we'll have a number of things coming here. So 115.20, 115.15, and that is like to be quite likely to be pretty good support. Or there's also a chance that actually this market begins to move higher from Monday onwards. That's also possible. Now finally, let's take a look at the gold market. Gold is doing something really, really interesting. So this is the daily chart, and here we had this key level come in. We saw the market go down by about quite a bit. So actually, let's see a market which has been a really strong trending market. It went down by about 4.5% in a very strong bullish market, 4.5% correction. And I thought we might do ABCD correction, which we actually did not. And then we took out these highs, and what it is doing is now something pretty interesting, because this is like shorter term I'm talking about. So let's actually draw this, and there you go. So you can see that 1.272 expansion of this, and if we were to take this, draw this, there you go, 1.272. And then if we were to take an expansion of this BC swing, doesn't quite get there. But we have a confluence of two things right here, and this is why we saw on the daily chart the market pull back. Now there's a chance that between 3011 till 3050 roughly, we could see this market actually form in some sort of a topping formation, at least for the shorter term, and we can see some sort of a pullback, just because we are in this key zones, and then where we are on the weekly chart, here we go. We can see that it's just been really, really strong, and this is the trend line. Whenever as the market pulls back into the trend line. It consolidates for some time, and then we see a nice move higher. So very strongly trending market, especially since February of 2024. A little bit of consolidation here, some consolidation right here, then a breakout now. Let me show you some really interesting things. This is the this is our really long term monthly chart, and I had done actually a video a long time ago, last year, in which I actually mentioned $3,000 gold, and we have hit that level last week. Now there is the possibility we might get into this red box, which is anywhere between 3080 to 3300 remains a possibility. Now there's another possibility, which is actually if we just take this entire consolidation, or we take this entire move from 2002 to the peak in 2011, and we apply our box method to it, we get roughly 3650, so roughly psychological level of 4000. Whether the gold is going to make 4000 remains to be seen, but it looks like we could get into this box, and where we have this number of really big ABCDs completing. Some of these are actually extending, so I'm not drawn those extensions yet, but for some of them I've drawn with the dotted lines a long time ago. So it looks like the gold wants to get into this box, and this is where we could see some major resistance come in. And then we will also begin to take a look at the commitment of traders report to spot, if the positioning is changing for big players such as the speculators, and of course the hedgers, the people who are actually professionals. They are hedging their stock because they're producers. So that will give us a lot of insight if we have got some sort of return at our hand. That is a more of a condition mechanism rather than a timing mechanism. For timing, we'll have to rely on our technical analysis, but it will be something really interesting, and we'll also keep on watching the open interest, because there does seem to be a decline in the open interest. Not showing that in this video, but I think I'll do some posts on the YouTube channel. I'll show you what I mean. Now on the flip side, let's take a look at the COMEX silver. COMEX silver is also getting right into this 61.8% retracement, which it came very close to in the month of October 2024, but it's trying to get there one more time. And we also have around 3640 this ABCD completing. So I believe it's also getting into a region where we have some strong resistance for the metal. And here we go. What we can see is, look, yeah, it's just doesn't look, it's not as strong as gold for sure, but even if it is in an ABCD formation like this one, so we could see a move around 37. So that's interesting. Actually, it's a little bit higher than what I thought on the monthly channel, monthly. And here we go. There we go. So here we go, 3668, where we have this brown ABCD completing. So we'll have to pay really close attention to, because as the gold also approach those key levels, and also where it is right now in terms of daily chart, the pattern that I mentioned, I think we are in a zone we need to pay very close attention to these two metals, because these are very close to completing some really key patterns as well. So this is what we are watching in the key markets that we like to follow. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon. And if you happen to like our video, give it a thumbs up. And if you think you learned something, please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted, and you will not miss on anything. So thank you very much. Good luck, good trading, and speak to you guys soon.